Everyone is looking at the stock market right now, waiting for a correction. But while the retail crowd watches lines bouncing on the screen, macro millionaires are building something called a Pygmy Portfolio. They are moving substantial capital into alternative assets, specifically rare coins, vintage comic books, and ultra scarce collectibles. Why? Because when unbacked fiat money loses its purchasing power, real physical scarcity is the ultimate shield. Today, we are diving deep into the massive shift happening in the alternative asset class, how fractional ownership is changing the game, and why small, concentrated allocations into tangible wealth are outperforming the traditional paper assets. Let's look at the numbers. Let's look at our first pillar, rare coins. For decades, people confused them with buying generic gold and silver bullion. But in 2026, the spread between raw metal prices and graded rarity is widening drastically. Central banks are hoarding raw gold, which keeps a permanent floor under the precious metals market. However, high net worth investors are paying staggering premiums for coins graded in the MS65 or higher by NGC or PCGS. You can always mine more raw silver, but nobody can ever mint another 1921 peace dollar in pristine condition. The market is behaving less like a commodity and more like fine art. With inflation structurally sticky, these historical artifacts act as localized stores of private wealth that doesn't depend on corporate earnings or banking liquidity. But what about pop culture assets? What if you've been watching the comic book market? You know what's been sitting through a massive healthy correction. The speculative bubble of modern variants has popped, and that is the best news investors could ask for. We are seeing a clear bifurcation. While modern overpriced books are losing value, gold and silver age keys are consolidating into incredibly strong hands. Investors using the Pygmy method aren't buying thousands of $5 books. They are pulling capital and target buying one single high-grade historically significant book, like an early appearance of an iconic character. As a broader market feels the squeeze of higher interest rates, various comic books, vintage pop culture assets are proving to have uncorrelated independent demand curves. The biggest structural change in alternative investing is how people are buying them. Historically, you needed hundreds of thousands of dollars to buy a top-tier asset. Not anymore. Fractionalized platforms have completely democratized the space. You can now own a pygmy-sized share of $1 million asset, whether it's a legendary rare coin or a pristine Action Comics #1. This has brought massive algorithm liquidity to an asset class that used to be notoriously illiquid. In a world of digital replication and paper currency debasement, physical and historical scarcity is king. Allocating a small portion of your wealth into high-grade alternative assets isn't just about making a profit, it's about opting out of a volatile system. Are you holding more hard assets, rare coins, or pop culture collectibles this year? Let me know in the comments below. Smash the subscribe button for more alternative and macro breakdowns, and we'll see you on the next block.